The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 20th Magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, no problem. Send me an email. Steve@TFNN.com. Inside that subject heading, please put radio show question. And inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 14 points. 25,071 is the print. Basically a flat day. The S&P's up 5 points. NASDAQ 100 up 12. Russell's up 4. Semis are flat. Trainings are up 85 buckaroonies. That's 0.8% to the upside. Spot fixed index is flat. Gold contract trading back $7. Silver down 11 pennies. Light sweet crude off 61 cents as well. And if the tone of the voice is slightly different, it's because I'm calling from my cell phone as we speak right now. But you should be able to see my charts on your screen. A technical difficulty. Things happen for us, and later on during the day, we'll try to figure out what that is. Hey, leading the charge to the upside, it is Rata Pharmaceuticals up $23 or 50%. LifePoint Health up 35% or $17. Google up 14. Hasbro up 12. SIVB, it's SVB Financial Corp up 2.5% or $7. To the downside, Booking Holdings off $14. Mercado Libre down 14. Illinois Tool down 11. Tesla off 10. Nearly 11, I should say. That's about 3.5% to the downside. So it just also means, because I'm doing this from my cell phone, it is way more complicated. No, I just figured out how to do that. I was going to say a little bit more complicated for me to get your emails, but I don't see any questions there. And you can use my Skype audio. Oh, that'd be great if we could do that. And so let's go try to figure out what's going on inside of these markets as we speak right now. Let's take a look at what should we take. Well, let's take a look at what probably is the most important set of charts to in fact, look at. Let's go take a look at our daily profile levels for our equity futures contracts. Let's begin by taking a look at the ES-mini. That's the very left-hand panel on your chart that you're taking a look at right now. That's on the screen. That's the ES-mini. You can see there's a brand new profile that formed on Friday. Now, the bottom of that profile is support. It happens to be 27.86 and 3 ticks, 75 cents out there. The top of that profile is resistance, 28.18. We're trading at 28.07. Price would make it all the way down to the bottom of its box. By the way, that box is bullish in nature. Means buyers, since price is above 27.97, buyers should be able to push price all the way to the top of that box to the 28.18 level. If price is able to take out that area, then what you've got is a breakout, another breakout that would be underway. I'm not saying that's going to happen. I'm saying that that's the level that you want to be watching, 28.18. To the downside, it's 27.86. Until either of those levels are taken out, then what you have is a consolidation in this price range I just gave you. Now, That's more important than the NQ, and the reason is because we do not have a new daily profile inside the NQ. If, as an example, the ES Mini were to close below 2786, then that would suggest to you and I that the NASDAQ could topple down to 7157. That's the top of its daily profile out there. The other profile that formed was on Friday, was inside the Dow Equity Futures contract. What it's been able to do today, what it was able to do on Friday, in essence was trade up to the center line of its box. Now, the center line is not in the center. It is closer to the top of the box. 25,089 is the level. The top of that box is 25,209. The bottom is 24,670 out here. So the question is, and I don't know the answer, do sellers have the energy to push price down to the bottom of that level, 24,670? That would be a decent-sized move. That would be over a 300-point move, 320 points as we speak right now to the downside. But that's what we would be looking at. You've got new profiles. We don't have a new profile inside of the Russell. So let's keep our focus on the ES Mini and the Dow. Why Why me? As we change over to our weekly set of profiles, what we're going to see out here inside of the Dow is that last week was a brand new Dow weekly profile box. Now, unlike the daily box, which had a bearish structure, bearish because that center line was closer to the top, the weekly has a bullish structure. Now, the top of that weekly box is 25,130. If price is able to move above that, it will tell us, it'll tell you, it'll tell me that sellers have been overrun with enthusiasm from the buyers. But until you see a break of that level, 25,130, that's the weekly top of the box. Again, the daily is 25,209, so we're going to defer to the daily. 25,209 is a key level, very key level, because that is a bearish structured daily profile. I'm not saying price is going to get above that. I'm saying that nothing has broken down inside the markets as we take a look at the ES Mini, the NQ, which is well above the top of its box, the YM, which is just trading inside of its market profile, and the Russell 2000. We look for any other new profiles out here. We don't have them. But what we do have is the Russell 2000 on a weekly basis, continuing to try to take out the top of that weekly profile level. That's 1705.75. We're trading, although, no, I don't have a delay on this any longer. We're trading right now at 1705.20. So basically the Russell 2000 is there. So any upside breaks probably come outside of the Russell 2000. It's about as simple as that. We don't like to complicate things around here. And if we take a look at the spot volatility index, we'll see right now that she is, and why is it a she? Just because Stevie just decided to say that. Just sounds nicer. And spot volatility index trading out at 1283 is the number. And we'll see that that is well below its 50-day exponential moving average. That level, 1403. Why is that important? Because sellers will never be able to get anything really going to the downside until you see it close above the 50-day exponential moving average. This is Steve Rhodes with TFNN. Right now, the Dow is trading up 7 points, S&P up 4. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no-questions-asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, the Dow is flat out here. S&P is up 4. Let's go to a couple of questions that have come in. And today, because my sound system isn't really working that well, best to just go ahead and send me an email. If you call, which I'd love to speak to you, I can't because I can't hear a darn thing out there. But Michael P. sent in a request out. He wants to take a look at Tesla. He says, hello, Steve. I have puts on Tesla. Ticker symbol, folks, is TSLA. I sold some this morning and got back in at 302. What's that mean? I got back in at 302. How's it look to you? Thanks, Mike. Well, let's take a look at that Tesla. I'll just describe what it is that I see out here, and then you can go from there. So if we look at the daily time frame chart for Tesla right now, we're going to see kind of a tale of two stories here. You're going to see there's a gap to the downside, but you're also going to see that today's candle technically is a hammer candle. Now, the difficulty about when you have a gap down and then you've got a hammer candle is how do you account for the gap here? And Michael, I don't know a really good way to account for the gap. So let's go with you've got a two separate meanings here, because a gap to the downside would be bearish. A hammer is bullish. So what we do know is that, and just take a look at the daily time frame chart, the last time that Tesla was down in this price area was back on the trading of July the 5th. And it was down with 17.4 million shares. It's 119 in the afternoon, 8 million shares. If we just multiply times 2, it's going to be close to similar volume. Doesn't look like it's necessarily going to exceed 17 million. So this may be testing a swing point on lighter volume. So to the extent that you sold those puts, let's go ahead and give you the automatic applause out there. Although we don't have one, you just kind of picture it in your mind that we're giving you the applause and that was the right time to go ahead and close out those put positions. What else do we know? We go back a little further left on the chart out here, we'll see a big breakaway, a big sign of strength, a sign of strength. Big, it's the eye of the beholder. But in this eye of this beholder, you had a breakout, big wide-ranging bar back on June the 6th, about 19 million shares, 18.7 to be exact. So Tesla on a daily basis coming to support. Also, the structure of its daily profile is bullish. The bottom of that box is 30308. Price is trading above that as we speak right now, just by the hair on its chinny chin. Now, if this doesn't turn out to be a hammer candle today, because the candle formation is really going to be all about what it is at the close out there, well, then we might have a different message. We're going to go with the message we got. At 121 in the afternoon, if you sold and you got back in, I see the selling of the puts. Is this the level of support? Look, you've got a test of a swing point on lighter volume. It's not exactly the type of light volume test you'd like to see out there, but I can see what it is that you're looking at. If price continues to move lower, just so you know, we'd come back and revert back to our weekly set of profiles. Our weekly set of profiles says, hey, price came down to the point of control. Another reason why that was a good area to take those profits. But if Tesla were to close this week below 293.48, you would anticipate a move down to 283.45. Michael, I hope that helps. I'm going to take a quick peek here at Stevie's other tools. The other thing that we can see out here is that price in essence has come down to this little red dashed line. That red dashed line is a Tommy DeMark support trend line. So price has found support utilizing a couple of different systems out here. That is my current take on Tesla. So the automatic applause sign for managing that trade well at the moment. We had a request out here from Bob in Spokane. Bob wanted to take a look at the gold contract. His comment is just cannot break higher for now. And for good reason, Bob. For very good reason. Let's go see what that reason might be out there. And that's because Bob is not the only one trading gold. You see, Bob has Bobettes out there, and Bobettes are trading gold in euros, or they're trading gold in yen, or they're trading gold in pound sterling. So if we go try to find that chart, and that was just simply a stall tactic there, Bob, because I couldn't find the chart out there that I want to find. Where in the Sam heck did I put it? It's nearby. I know it is nearby. We just got to find it. There's that one. I don't want that one. I wanted this one. That's the weekly time frame chart. Sort of what I wanted, but not exactly. Give me a moment. It's got to be here. It's got to be here close by. That's not it. I had to put it somewhere. There we go. Here's what I wanted to show you. Jeez. Good Lordy. Bob, here's the problem. Here's the exact problem. Let's say, not you, we won't use you as the example, but let's just say there's somebody that's trying to buy gold over here in the U.S. in dollars and says, you know what, I see a bottom in gold and I'm buying. Who is selling to them? Who's selling to them? Well, one of the things that we know is if there is a Bob in Europe, we were going to use that. Well, let's use the name Steve. Let's say Steve is buying gold. I'll use my name, right? So let's say there's a Steve that says, you know what? There's a bottom that's happening in gold. And I can show you that bottom, by the way, based on the daily time frame chart for gold priced in dollars. So let's say I'm a buyer. Well, who is it that's selling? Is it Stephanie here in the U.S.? Or is it Steve's cousin over that is trading gold in euros? We're going with the latter. Why? That happens to be panel number 2. And price continues to move lower, gold in euros. There is no sign of a bottom other than the hammer candle that formed on Friday with regard to gold in euros. But basically, that's the only thing. But we haven't seen any follow through. You've seen no follow through to the upside. So what this tells me is Steve in trading gold in euros has no reason, none, zero, zip, nada, zilch, to buy gold. Hey, even worse, Steve Osan, that happens to be sitting over in Tokyo right now, is looking at his screen and is saying, I'm not buying gold in yen. Now let's face it, it's all about whatever it is that you or I buy. When we take a look at it, it's what it is in our dollars, right? If you go out and you buy a Ferrari today, you're just buying a Ferrari in U.S. dollars if you're here in the U.S. If you're out at the grocery store and you're buying Corona, you're just buying it based on what it's selling to you for in U.S. dollars. You're not really concerned what those items are going for in euros or what they're going for in yen or pounds out there. A whole different story when you start taking a look at, well, managing your money. Because if you're managing your money and you're overseas, you want to understand, what is it that I'm getting? What is the value in the currency that you are in out here? And let's face it, Bob, I'm referring to Bob now, that requested this information in the Tiger's Den. If you go take a look at the right-hand side of my chart out here, Steve over in London, who's drinking a pint of Guinness right now. sees that there's no reason to be buying gold in pounds. So you're exactly right. Gold just cannot break higher for now. And the reason is because it's being toppled by nothing but sellers worldwide. And until you start to see gold moving higher in all major currencies, there's really no reason for gold to continue to move higher. Gold in dollars isn't going anywhere until gold in euros, gold in pounds, and gold in yen go with it, to whichever direction it's headed. This is Steve Rhodes with TFNN. That's your Goldilocks update at 1:26 in the afternoon. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Up 6 points. The Russell is up 390. And really, when we take a look at the indices out here, in fact, let's go take a look at some of the indices. We really have a tale of multiple stories. So let me switch over to my other charts. What I mean by that specifically is we'll take a look at the Dow. So the Dow's off 7 points right now. No big deal. If we take a look at the Dow, even though we've seen a retracement here for the past couple of days, that's all that it is. It's been a retracement for the past couple of days. In fact, if you were an aficionado of Stevie's red line, now turned green, which means that the price oscillator is above zero, you would be saying to me, hey, Steve-O, what the price movement that's going on inside the Dow was to be expected. It was to be expected on the trading day of July 12th and July 13th when your price oscillator got up to zero. Now, you don't see a price oscillator on this screen. Instead, you see Stevie's red line that turned green, green with envy. And what that meant was that the price oscillator was nearing the zero, was at the zero level. Now, what typically occurs when that happens is we see eventually, not necessarily right away, but we're now in that eventually time period, we see Stevie's red line / green line and price catch up to each other. And that's exactly what is taking place. Now, what you wait for there is what is the outcome of that test. We haven't really had that yet. The green line, Stevie's red line, is at 24,948. Price is at 25,048. You can see price pulled back a little bit further, but we haven't had the kiss and tell. Is it a kiss and cousin, or is it something more romantic? And price is going to go ahead and take off from there. I don't know the answer. I just know that that's the test that is going to take place out here. If we see a test and rejection, then that says that price heads higher. Heads higher to where? Well, at least to the swing point from June the 11th out there. Maybe beyond that, but that really becomes a resistance. That's not a huge upside potential, but what it does lead us to believe is that we will see actually another higher high. We've seen a series of higher lows, and if you see a successful bullish test of Stevie's red / green line right now, says you're moving on to higher prices out there. That's the story of the Dow. If we go take a look at what's the story of the NDX 100, well, I guess we're going to do that because I mentioned that, so we should. What we're going to see out here is we're going to see that prices now testing and rejecting Stevie's green line out here. 73.60 and change is the number. Close enough. The high of the day was close enough. Now on Friday, price closed down below Stevie's green line, Stevie's red line. What's that mean? It means that there could be more of a retracement that is underway. So you've got a couple of big cats that are going to be releasing earnings this week inside the NDX 100. At this stage here, you'd have to look at each of those individual stocks and make up their basic message. But at this stage of the game, the NDX 100, until it closes back above Stevie's red line, green line in this case, similar to the Dow, it says, hey, this has opened itself up for a further retracement. Now, the ultimate in retracements here, and I'm not saying this is going to happen, but it could, takes you all the way back to this little red dash line, that little Tommy DeMark support trend line from July the 2nd. That's a possibility. Again, a tale of two stories. Is it the NDX that is telling you and I the story? Or is it the Dow? Or is it the New York Stock Exchange? I hear a lot of people kind of trash the New York Stock Exchange, saying, hey, that thing has done diddly out here, Bo diddly. And if we take a look at the actual indice, you'll see that basically it's trading in a sideways consolidation out here. However, you and I don't stop there, because if we stop there, we'd be missing the message of the New York Stock Exchange. And in this case here, this thing is wacko, psycho, has two personalities too, because right now, if we take a look at Stevie's Ninja Trader chart, you're going to see that its red line turned green basically when the Dow did, and prices trading above that level. So what's really going on inside the New York Stock Exchange is nothing more than a test of Stevie's green line. The oscillator and change line, that's at 12,754. If that sounds foreign to you and you would like to know how to calculate what that line means, then get yourself over to TFNN's website. Go to newsletters, go to trading newsletters, go to Mastering Probability and sign up for it now. There, if you sign up for it right now, you're going to get access to two extraordinary workshops. One will explain to you all the details behind Stevie's red line and the reason why it is you want to make sure that you have this on your trading system. There is no moving average that I can give you that is going to provide you with the same results as Stevie's green line and or red line out there. So at this stage, as much as somebody might want to trash the New York Stock Exchange, you're not going to let that happen. You're going to defend the New York Stock Exchange, and you're going to say, the only thing that's going on is we're waiting for Stevie's line and price to catch up to each other to give us either the bullish or the bearish message out here. To show you how psycho the New York Stock Exchange is, we could go take a look at the advanced decline data. And if we take a look at it, it has an oscillator reading as well. And that oscillator reading happens to be below zero. It's right now, it's the bottom panel on your screen. It's at minus 33.18. It says sellers are in control. So now how are you and I supposed to interpret that? Well, that's pretty easy. It is sellers that are in control. And sellers are trying to push price down to Stevie's red line. That's all that it means out here. It doesn't mean that there's some type of significant top. Not yet. You've got to close below that level. That level being 12,754 and change out there. Okay, we've got a question that's come in, so that's pretty good. That way we can get back on track here with answering, hey, what's this equity doing? And that question comes from Pete D inside the Tiger's Den. So if we go try to answer that, and that is for MUFG. MUFG, that stands for Mitsubishi Financial Group out here, gapping to the upside today. Now here's the problem. Probably, well, I can't say that. I gotta step back. I was going to say that maybe this stock here might have lots of gaps because of a foreign currency translation, but maybe that's not the case out here. Maybe Mitsubishi Financial Group is just dealing with financing of Mitsubishi cars in the United States, and it's a U.S. operation. Hey, Pete, do you know the answer to that? Because I don't. But I was just throwing it out here, and I would expect to see more gaps if this thing was dealing with foreign currency exchange out there. But the question is pure and simple. Would I buy MUFG? Again, that's the ticker symbol. Well, to answer that question, we got to do a couple of things out here. We got to put MUFG on Stevie's other set of system. It's a investment bank. Okay. This list stock chart looks a whole lot different. What the Sam heck is going on there? What do we have going on? Yeah, so that's, I'm just trying to get two systems to catch up to each other. The answer, though, is going to be no. And the answer is going to be no. I wouldn't buy it right now. I wouldn't buy it until it closed above. I'll give you the exact price out here. That exact price is going to be this little doji candle from June the 12th. Now, maybe price is trading above because this chart here has a bit of a delay, or so it appears. And that's going to be $6.19 to be exact. Let's go see where it's actually trading right now. $6.19. It's at $6.21. Now, Pete, if in fact price closes above that little green dash line, that's at the 619 level out there, that will tell us that a Tom DeMark trend line, resistance trend line, will have failed to hold as resistance. And that would say to me, price would move higher. So when we get back from this break, let's continue taking a look at Mitsubishi Financial Group for our man, Pete G, inside the Tiger's Den. This is TFNN. Dow's basically flat. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
One of our dinners, and the question was, would you buy this today? And we came up with a price point of $619. That price needs to close above. It's at $620 right now. So what we know about it is you've got a gap to the upside. That's a sign of strength out there. Volume behind that move so far today, about 940,000. So about 1.8 million shares. Happens to be the same value of the June 4th swing point that it's testing out there. So what we suggested to peak is, let it close above 619. Now, if it doesn't close above 619, or you're really looking for a better buy price out there, that better buy price would be a test of Stevie's red line. And it is red at this moment. And that's at about $5.72. But if it closes above that 619 level peak, that's where you're going to have to make a decision, I suppose, if you're looking to add this to your portfolio out here. I would say that my initial target right now would be about 660. That happens to be the center of its weekly profile. It's the only profile that you and I have out here that we can hang our shingle on. Now, this profile, this monthly profile that we're looking at, it's slightly bullish in nature. So 660 would be the natural level of resistance. That doesn't mean that's where it's going to end up stopping, but it would certainly be taking a pause there, or should take a pause there. So I think your upside potential that you're going to have to measure is about 660. If you're looking for a longer term, 725 would be the number as we speak right now. So thanks for asking. I hope that helps you out with regard to Mitsubishi Financial Group out there. We had a request that came in, or has come in, from Nick A. And Nick asked the question, hi, Steve, what do Bob and Stevie see the SMH doing? Thanks for our comments. Well, instead of going right to Bob, he's referring to my bullish or bearish. I don't know. If he plugs it, you might as well at least show it, right? So he's asking, hey, what's Bob telling us right now? Here's a version of Bob. Here's the version of Bob that which is my bullish or bearish system. What this tool does, it's a part of the NinjaTrader application that allows you to create a market analyzer. And what Bob stands for is bullish or bearish. And I think that even though for me now, this technical jargon and language, whether it's Stevie's Redline, market profiles, ABCD, RMI patterns, swing points, that could sound like just absolute foreign language out there. Even friends, even people that are in the market that know me, they still ask me questions. I give them this stuff. They're, what did you just say? So I can only imagine that many of you out there are saying the same exact darn thing. Well, so what I wanted to do was, in essence, establish a set of tools to see where that stacked up against other newsletter writers, the nation's top newsletter writers, and say, hey, where does Stevie's tools stacked up? Well, we found that. We found that back in March, when they could start unveiling what Stevie's tools said, was it was PDG. It was pretty darn good because it led those number one rankings out there. So then I said, hey, I got to take that intelligence and program that into the system so that everyone, even somebody with technical prowess, because you just want to know, is the equity that I'm trading or the index that I'm trading or wherever my money is being invested, is it bullish or bearish? Because look, I want to be able to teach how to buy a bottom, but those bottoms can happen pretty quickly. And then if you haven't bought the bottom, the question is, well, should I be adding to a position? Should I be going into it? And the answer is, well, it depends what Bob says. What does Stevie's bullish or bearish system say? Here, this shows us what's going on across the world and take a look at the ETFs that are available to us. Because each of you can do this too. So instead of going and taking a look at the Shanghai index or the Hang Seng index or the Nikkei or the Russian index or the Polish index out here, we just simplified it. I've just simplified it. I've just simply listed the majority, not all, but the majority of the different worldwide ETFs that represent those indices out here. That way you can say, hey, you know what? I want to have a portion of my portfolio in foreign equities out there. And if that's the case, and you're saying, you know, that emerging market area, EEM, that a lot of people talked about last week on CNBC and so forth, you know, must have been invested for a heck of a long period of time with it moving lower out there, and they're trying to get you to buy into it. I'd say, hey, go take a look at Australia before I go take a look at EEM specifically. Now, you don't see the EEM on here, but you would on another series of Bob. So Bob is just and if you're looking to buy a pullback, I give you different support levels. You'll see you always want to buy support on any kind of retracement. That's what that column there that says daily OUL support. That's Stevie's red line. Or daily TAS support. If you're looking to buy something, those are the numbers where you would be looking. There's your entry price. It is as simple as that. If you're also looking to short something, you're trying to understand where resistance is, where does price need to plow through? Well, I've got two resistance levels out there. If nothing's there, that resistance number doesn't exist. And then, of course, I've got the tools out here, that Rhodes Momentum Indicator set of tools that tells us whether something's trying to form a top or a bottom, and on different time frames. In this case, daily, weekly, and monthly. So there's the plug for Bob. That's what Bob is. But now, let's get back to the question. What was Bob saying? In this case here, you and I, we're just going to go ahead and take a look at the charts out there, because instead of looking at the SMH, which is the ETF for that, we're just going to go take a look at the semiconductor index. That way, you and I get the real deal out here. If we take a look at the real deal right now, what I would share is the following. What was the question? What do Bob and Stevie see about the SMH? I really kind of see a market that's just moving sideways out here. You probably didn't need me to tell you that, but you asked my opinion. What is it doing? You can see that today, over the past 4 days out here, 2, 4, 5 days out here, price has been testing and rejecting Stevie's red line. Happens to be red at this stage. Tells us our price oscillator is still below zero. But that's the level of support. That level, by the way, is 1352.78. So if you're looking to trade this to the downside, you need to see it close below 1352.78. You could do that via the SMHs. However, that says that price would probably pull down back into the prior swing point out here. I'll give you what that swing point is, or I'll give you at least the day, and then you can kind of measure that up with the SMH. That would be July the 2nd. I'm not saying price is moving back there. I'm saying the price closes below Stevie's red line. That becomes an outcome. Right now, what price is doing is just simply testing its prior swing point. And that is from back on July the 10th out here. If you see it close above, and this is the semiconductor index, above the July 10th high, by the way, that price point out there is 1375.33. Then what that's going to tell you and I is that price is going to go test that Tommy DeMark short-term trend line, that resistance area. And that resistance area is right here at about the 1422 level. So that's what Stevie sees when he takes a look at the semiconductor index on its for its daily time frame out there. But because our listener wrote in and asked about the SMH, we're just going to do this here as we go to a break in about 30 seconds. Here's the SMH. Here's the ETF out here. And what this is going to tell us is that today was nothing more than a test of the prior or the current top of the box out there, 105.21. Volume on the move higher, because it is trading higher right now, is 2.89 million shares. And July 10th, well, July 18th, July 18th is a level. That only had 4.7 million shares. So you've got pretty decent volume as this thing has moved higher. It's got some ceiling resistance. That's the weekly set of profiles. The top of that box, 106.91. So you wouldn't really want to go long until you see the SMH close above that of 106.91. And then, maybe then, it heads back to its highs. Maybe its all-time highs from back in March 2018. This is Steve Rhodes from TFNN. Right?
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So let's go take a look at Google. Google coming out with earnings tonight after the bell. Let's try to get a feel, see if there's a tell in the marketplace. Now, the charts that you're looking at, if you're watching us on Tiger TV or inside the Tiger's Den, happen to be the 3 time frame charts, the daily, the weekly, and the monthly. Monthly's on the right-hand side for Google. So we can see from a monthly basis right now, if we were to close here the month of July, you'd be closing a new all-time high, which is $11.99. That's what we're trading at right now. That's not the actual all-time high that was made intra-session. That actually takes us back to a few days ago. So let's go back and take a look at the daily time frame chart here for Google. That takes us back to this little doji candle back on July the 18th. There was 1.4 million shares. It's 1:55 in the afternoon. 1.1 million shares. So price is pushing into a swing point with volume. That's what you like to see. Now that swing point hasn't been tested. 120450 is the number, by the way. That's the all-time intra-session high out there. So it's being pushed with volume. It's not a bearish sign at this stage here. Not as we speak at 155. I can't tell you whether it's I can't tell you whether buyers know what the heck they're doing. But if you assume they do, they're pushing into the swing point with some volume out there. Now, you really have, in essence, on a conservative basis, an A to B equals CD pattern that, for the most part, has been confirmed. That A point, A, B, and C point I'm drawing on my system, that's the conservative one. That gives you a price move to 1224.87. The reason I say that is the swing point high from June 20th, which had 1.6 million shares, was passed with 1.6 million shares. And today you got 1.1. 1186.29 was the B point. So if we're looking for a tell in the market with regard to Google, looks to me like it's going to not disappoint and that it is going to move higher. And that upside potential, maybe it's 1224, maybe it's 1260. Folks, thanks so much for putting up with, well, maybe it was easier that you couldn't actually see my ugly mug, the video out there. But thanks for being here. Stay tuned. Another great hour is coming up with David White, our favorite polar bear. Have a great Monday. Thanks so much for being here. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.